Afternoon, students. Welcome back to Financial Management. We're now busy with Study Unit 5, which is the cash budget. Okay, one thing that you need to know with the cash budget, it's just what it says, cash. So we're only interested in everything that is cash. We're only interested in the Mandelas. So this budget only takes into consideration everything that's cash, everything that's non-cash. For example, like your depreciation. Remember, depreciation is an expense, but it's a non-cash expense. Then you need to remove it from this budget. Bad debts or credit losses, you need to remove from this budget because it is not cash. Now, the outcome says at the end of the study unit, you should be able to know what is a cash budget, the conditions for compiling a successful budget, the goals, the functions, the limiting factors, and how to draw up a cash budget. Now, a cash budget is a statement of a company's planned cash inflows and outflows, right? Remember, with our financial statement, a cash budget is actually just part, it assists a cash flow statement. So this is a statement of the company's planned cash inflows and outflows. Compiling conditions for a budget means you need to have sufficient background information. You need to clearly be able to define lines of responsibility, meaning this is what this person needs to do and this is what somebody else needs to do. There needs to be management support levels, good organizational structure, meaning that everyone needs to know what is their responsibilities, and reliable financial and management information. I don't know, do some of you know the acronym for GIGO? GIGO means garbage in, garbage out. That's why your financial information needs to be reliable. The goals of a budget is to increase profitability and to ensure cash resources are used optimally, meaning it is used to the best of its advantage. One thing you need to realize, if cash is only in a bank account, it's not used optimally, because if you could now invest in a project that could give you 15% return and the bank only gives you 2% interest, the money is best used in the investment in the project than just staying in the bank account. Another thing is, when money is just laying in the bank account, right, it normally becomes a temptation. That is where, you know, everyone has their own intentions, and that's where intentions are created. And then people start becoming creative. They start doing creative accounting and they start to fraud. So it's best, your cash is best spent if you invest it in a project that gives you a high return or an investment that gives you a good return. Functions of a budget. Now, these are, remember I told you, my slides are just summaries, right? So you need to get the textbook to see and understand what does this mean. I actually just summarized the functions of a budget, and there is more in the textbook. And remember, when we test what's in the textbook. We're not limited to test what's on the slide only. So the functions of a budget is, it's an assignment. The function is to a communication tool. The function is also an indication of external factors. The function, it coordinates. It's a method of control, and it indicates management's responsibilities. Budgeting, limiting factors, you get external and internal factors, right? These factors you will find in your textbook. And how to draw up a budget, right? A cash budget. This is your framework. Guys, go and study this. So when you draw up your budget, you will, let's say if they tell you, you must draw up your budget for 3 months, okay? Let me just show you here. If they say you must draw up a budget for, okay, pen is not writing, but it's fine. You draw up a budget for, let's say, January, February, and March, right? So, meaning this description on this side will be the same. But year by months, you will have 3 columns, a column for every month. The framework is you will give the description, right? All the descriptions will be on your left-hand side. And it's always opening balance, add cash receipts. Now, on your question, you will know, or they will indicate what's the receipts, but you need to be able to identify it. Remember, I told you the elements. Now, the receipts is income, right? So, you remember I told you that if you know that cheat sheet, it's going to help you for the rest of the semester. So, you need to know all the income that's on your question. That will come under your cash received. Then it will be, you'll say opening balance plus all your cash received is equal to your cash available. Less your cash payments. Now your cash payments is all your expenses. And then you'll say your total cash available less your cash payments equals to your closing balance. Now you need to know your closing balance of 1 month is always your opening balance for the next month. So if this is your closing balance, let's say for January is 20,000, it will be your opening balance for February. So your opening balance for February will be 20,000. And let's say your closing balance for February is 5,000, your opening balance for March will be 5,000. So thank you so much. The next session we will do a question just to explain, but for now, go and study the framework. Know the framework because the framework will lead you how to do the question, the calculation question. Thank you so much. Goodbye.